everyone, I'm Nisha Kohli, and today I'm going to talk about rethinking growth in this changing world. Grow or die, that was the mantra for every boardroom for decades. Now, growth was actually the gold medal for every company and I would say all top level executives because all their KPIs are either based on top line or profitability or investment ROI. But this situation is changing and the world is different now. We all know that globalization is slowing down, populations are aging. We are in a tariff situation where import export is becoming more and more costly. There are many other issues like sustainability, climate change, human rights. So today, chasing growth at all costs, like it's actually like running on a treadmill, which keeps on speeding up, and you keep on speeding up, keep on running. Sooner or later, there's a risk of falling. Now, this endless expansion, whether it is at country level or whether it is at company level, it actually leads to overpriced acquisitions, bloated operations, and also distracted leadership. And when the focus is only on next quarter to next quarter to next quarter, the long-term resilience gets left behind. So the real question that today's leader should ask is, how do we build companies which actually last for a long time rather than just keep growing and bloating? We also know that in today's scenario, the younger generation, particularly Gen Z youth, they are becoming more and more selective. And people like us, the middle-aged people, we are becoming more and more aware about our health. So companies like pharma, like food, they are facing problems in growing, to how to grow responsibly and how to sell responsibly, how to use resources wisely and deliver real value. So the old playbook, the old ideas of sell more, open more, spend more, it's actually a risk game now. It all has become risky, and chasing growth at all costs can lead to wrong decisions for companies, can increase overheads, can result in further losses and leading to winding up or liquidity. Those kind of extreme cases can happen. Now lately, a couple of days back, it was in the news that the fast fashion giant Shein was fined not only in France but also in Italy for misleading environmental claims, while its emissions, they keep on increasing. Now in France, they were penalized for talking about the discounts. Specifying the discounts, but not clearly mentioning on what price these or what base prices these are applicable. So for growing so fast, companies, they risk losing trust, they risk losing credibility, and even their license to operate. So the bigger question is that how do we build an organization which creates lasting values? More and more businesses are realizing that endless expansion isn't the only route to success. In fact, in today's world, when we are dealing with climate change, supply chain shocks, geopolitical wars, and inequality all over the world, the short-term gains are not going to create value, but actually they may erode it in long term, and also the company may lose its strength. So the new mindset which is emerging is not the growth mindset. Now the thinking is, how do we create value post growth? So it's not about giving up profits, it's about widening the definition of success and protecting the core of business, deepening the relationship with the stakeholders, gaining customer trust, strengthening supply chains. I mean, a solid landing where the company can stand during the storms. Let me share with you some compelling data. So, a study was conducted over a period of 20 years on 10,000 companies, and they found that out of those 10,000 companies, there were 172 companies that hardly grew in their revenues, but they were very stable in terms of delivering their shareholder returns in line with the market with lesser volatility of around 10% or so. So they were half as likely to suffer from catastrophic value collapse. I mean, that's a very good, evidence to show that being stable is more important rather than growing fast. So many have been around twice as long as their peers, and one in three have actually even beat the market outright. So, what made them so successful, or what made them so different? Let's look at those areas. They actually avoided reckless mergers, mega mergers, I should say. They say stayed disciplined with capital and kept on innovating in small but meaningful ways. So, when we grow with inorganic manner, like acquisitions, etc., sometimes that can actually kill value for all the stakeholders. The difference is in the ask or the demand by the shareholders. So, if the board, if the shareholders do not focus on quarterly earnings or quarterly revenues, the company can withstand the pressures and sail through and can be more stable. So, in today's scenario, we are seeing this approach being played out across Asia. So, I looked at Toyota in 2025 when tariffs have been introduced. Toyota is not focusing on pushing more on the generation or generating units on volume. They're actually focused on tightening their spends and focusing on quality, and they are still um, held operating um, profits near 5 trillion, I guess, and that's playing the long game, and it builds investor trust. Another company in Singapore, Keppel, you might be aware of, so that reshaped its entire business model. So this company, to become more and more resilient, they sold their assets and they invested in data centers. So essentially, they changed their business model. And then today, 72% of their profits come from recurring income, which means it's more predictable cash and less earnings than volatility. So, what can executives do right now? Post growth success is not about standing still, it's about making deliberate moves that create stability and trust. So, I'm going to give you a 5-part action items, or you can say suggestions, that can build us build this kind of mindset. First thing to focus on is to focus on the on building a stronger balance sheet. Setting a KPI for net debt to EBITDA and tying that part with the leadership bonus can actually keep the leverage in a healthy range. And this makes sure that financial resilience is rewarded, and it's not just rapid expansion. Second, go for quality and recurring revenues. So track what percentage of your revenue comes from recurring sources and what comes from service-based streams. So, if you have service-based then it is more likely that your revenues will be um, recurring. So give incentives for profitable and sticky revenues to your employees, and not just focus on the top line growth for the sake of hitting numbers. Put also profitability and working capital management, etc., into the KPIs. Put stakeholders in the boardroom and integrate ESG metrics to execute scorecards, such as carbon intensity per unit of revenue or employee, that can be introduced. Then we can have management scores, supplier compliance. Um, I mean, uh, we can talk about even community programs or community impact in the boardrooms, so that these KPIs, they trickle down and then these get actually implemented, building good stakeholder relationships. So when bonuses depend on these outcomes, ESG becomes a real behavior in the organization, and it's not just focused on a report. So investors also get reliability when you are managing your balance sheet, when you're managing your KPIs, and also focusing on the stable growth. They get the assurance of free cash flows and consistency, and repetitive or recurring dividend also with recurring revenues. So reward management for delivering predictable earnings and steady payouts, the kind that can keep the long in term investors happy and on the side of companies. um, Next, I would say invest in people. So investing in people is actually like developing human capital. So you are creating a brand for yourself by investing in people, when they are so proud to be working in the organization, and they carry the brand outside as well. And when you allow them to innovate, I mean, you incentivize them to innovate, that brings up their creativity, and that actually brings ownership also from within, and they give their best to the organization. So and for development of human capital, not just allowing for creativity but also appreciation, like creating small experiments, and then when the experiments are impactful, giving them a lot of appreciation, and you know look, making that as a forward looking approach for everybody in the organization. So these items, or these action items I should say, they are the culture shapers. They actually reward executives, and they change their behaviors, bring resilience, improve quality, and also builds trust every single year with not only employees but also with your customers, with your suppliers, with community. So the truth is very, very simple. Growth, it's still going to come, but this growth will not be in the form of top line. It will not be mindless growth. The growth will be wide. I mean, the winners of the next decade will be those who build businesses that are robust, trustworthy, credible, and innovative, not just big. So I would like to ask a question to every leader who is watching this video. Um, are we just chasing numbers, or are we building a company that's rock solid, that will still be that will still thrive? I should not say survive. That will still thrive 20 years from now, because in today's world, resilience is the key. It's the new competitive advantage. Thank you very much for listening to this.